As you can see, I'm going to be sharing with you live strategy that you can use to trade a real account. Okay, I'm not in this particular video. I'm more interested in showing you something that you can add. You can actually add this strategy to any strategy that you are using. It does not matter if you are using ICT, CRT, if you are trading using indicators, if you are trading using SMC or smart money concept. It basically does not actually matter what you're using to trade, because this strategy I'm going to be explaining to you, you're going to use this to, you're going to add it to any strategy you're using, and you're going to make money from from the forex market. I'm actually sharing with you something that I've used because I'm actually a profitable forex trader, and I also have a lot of students that have made profits from the financial market. And we've passed, me personally, I've passed several profit accounts. Even my students, I have some students that have passed several profit accounts. So I just basically want to show you something that you're going to integrate, you're going to add to, you're going to add to your. I love trading gold very well. Basic of recent, I've been trading more of gold. Okay, I've been trading more of gold, and we've been seeing very, very smooth and very, very beautiful price actions. Okay, so how are you going to trade the market? How do you trade gold, or how do you trade USD, or how do you trade GBP USD, that you're going to make consistent profit that you can use to pass Firm's account, that you can use to pass evaluation phases, phase 1, phase 2, and even get funded and make your first payouts? How do you actually trade the market? Okay, if you're a complete beginner, or you're still struggling, you don't really have an edge at all in the market, and you feel that you don't have sufficient knowledge, or you want someone that can hold you in the hands to help you navigate through this journey, I'll counsel you to join my VIP or to join my mentorship session. I just want to help my fellow traders. So basically, if you come to the market, if you look at the market every day, if you approach the market, you have to always go to the higher time frame. A lot of you are very, very focused on the lower time frame. Now, let me tell you what you're going to do. If you have a small account, you want to grow a small account, because in this channel I've shown several examples where I grow a small account. There was even an example where I grew a $2 account to $35, $100 to $500, $50 to $300. I've done a lot of flips in this channel. So, but basically, it does not actually matter the account size you're trading. You always have to go back to the 1 hour time frame, 4 hours time frame, and the daily time frame. The reason why it's good for you to go to these time frames and observe the market is that it's going to help you know what to do. Okay, it's going to help you know what to do, or know what you are doing, so you don't actually execute trades in the higher time frame, like the daily time frame, or the 1 hour time frame, or the 4 hours time frame. You just basically go to those time frames to see what the market is doing. Then you have to now trade in line, or you have to now trade in the same direction, or follow the same thing, the same pattern. The reason why I'm emphasizing on the same pattern or the same direction is because the market can be ranging, or the market can be trending. So the only way you can know the actual direction, or what the market is actually doing, is when you're in the higher time frame, such as the daily time frame and the 4 hours time frame. Basically, me, I'm a day trader, so I love trading from the daily time frame. So I basically look at the daily candle. If you look at this daily candle right here, you're going to observe that to this candle, you're going to observe that the market has been bullish, right? So if you now go to the 1 hour time frame, let's go to the 1 hour time frame, guys. Look at the 1 hour time frame. Can you see we have 1, 2, 3, 4, 5, 6, right? We have 1, 2, 3, 4, 5, 6. We have 6 candles here, right? So now in these 6 candles that are formed here, we have several opportunities to scalp the market, to take trades, or even join this trade, because from the daily time frame we've seen that the market is in a bullish condition. So the reason why I'm showing you this 1 hour candle, the reason why I'm showing you this 1 hour candle, is because I'm trying to make you see what the market is doing, okay, from the higher time frame perspective, because we're going to be trading in line with the direction of the market, or we are going to be trading in line with what the market is doing from the higher time frame perspective. Now let's ignore this. You see this candle, right? Let's ignore this once. Let's come to this zone, right? Let's come to this zone. Okay, and these other zones, right? You saw that from the 1 hour time frame, the market was actually bullish, but and also in this region, the market was bearish. The market was bullish here, the market was bearish here before it continued being bullish, right? So the overall trend of this market is a bullish trend, all right? So now I still want you to understand something. This is just simple puzzles that you can solve mentally as a trader that will help you understand or help you stay in the right place. Because when you're in the right place, you can make money, right? When you're in the right place, when you're in the right direction, when you're in the right trend, you can make money. All right. So, but you still have to understand that the market does not move in one direction for a very, very long time. The market would buy, pull back to 40% of the range, this range here. The market pull back to like 30 or 40% or even 50% of this range before it now bought again. So as the market got to this zone later, not today, but maybe from, because today is Friday, right? But maybe from Monday or Tuesday, the market is going to pull back and it may get to this point, or it gets to this point, or it gets to this point. But the market is likely going to pull back 30% of this range. You see this range here are formed. The market is likely going to pull back 30% to the range. This is how the market be, because the reason why the market do this is because the market cannot just move in one direction for a very long time. The market has to buy, sell, buy, sell, buy, sell, buy, sell. All right. So now this is in the higher time frame now. But even if you now go down to the smaller time frame, like the 1 minute, 5 minutes, 15 minutes, you're still going to find that the market is going to buy, sell, buy, sell, buy, sell, buy, sell. Right. So basically, the market buys and sell in a ranging condition, and the market buy and sell in a trending condition. And the market can also be trending or ranging. So you have to figure out what the market is doing from the higher time frame. If the market is trending or the market is ranging, you have to figure that out from the higher time frame, which is from the 1 hour time frame, or from the 4 hours time frame, or from the 1 hour time, or from the daily time frame. That's where you figure out what the market is doing. Then you now step down to the smaller time frame, like 15 minutes, 5 minutes, and 1 minute, and range and trade with the mindset that the market is. Let's step backward. If you figure out the market is ranging, right? Let's say you've done your analysis in the 1 hour time frame and you figure out the market is ranging. So when you step down to the 15 minutes time frame, that's M15, or the 5 minute time frame, or the 1 minute time frame. When you step down to this time frame and you're trading, you're going to have the mindset that the market is actually ranging. So whatever trend or whatever position or whatever trade you're holding, do not hold it for too long, because there's a very, very high likelihood that the market is going to pull back on you. Why? Because the market is actually ranging. If the market, if for example, now this is a ranging market right here, the market, you enter the buy from here. If the market gets to this point or this point or this point, you should exit the trade, because as the market is ranging, the market is going to pull back into your profits. But on a trending day, this is what the market is going to do. It's going to buy, range, buy, range, buy. But on the ranging day, the market is going to buy, sell back, buy, sell back, buy, sell back, buy, sell back again. It's just going to keep on printing so many candles. So you have to understand these things, distinguish between them, and try to trade in line with the direction, or try to trade in line with what is happening in the market.